think about using any crypto exchange, you have to watch this video. In it, I'm going to give you 5 of my best exchange picks. I'll give you everything you need to know about their fees, features, support, and, most importantly, safety. I also have a number of deals and discounts that you will only get here, so don't go anywhere. Anything that we've learned over the past year, it's the importance of self-custody. Nothing compares to holding your own coins and tokens, and I have got a dedicated video on self-custody which I'll leave in the description for you guys. Seriously folks, exchanges should just be used for buying and selling. The less crypto you keep there, the better. And finally, these picks are presented in no particular order, so do keep that in mind. Okay, with that spiel out of the way, let's dive right into the video with our first pick, and that is Binance. Now, I'm pretty sure that you'll have heard of Binance, but if you haven't, then here is the quick TLDR. Binance is the largest crypto exchange in the world, and it was founded in 2017. Since its founding, Binance's growth has been quite incredible. In the past 2 years, its revenue has grown tenfold, although such success has also thrown up challenges. Binance has long operated as a, quote, decentralized company with no fixed headquarters. However, this has attracted a great deal of regulatory scrutiny. In order to address this scrutiny, Binance has in recent years gone the extra mile by trying to become one of the most regulated crypto exchanges out there. It has secured licenses in at least 7 European countries, 3 in the Middle East, as well as Kazakhstan, South Africa, Australia, and New Zealand, while its subsidiary, Binance US, serves the massive American market. So it's no secret that Binance is trying its hardest to get regulated as much as possible. Such regulations should help to bring some certainty to an industry that has seen its reputation damaged by other offshore exchanges in the past. Of course, regulations count for little if the exchange in question doesn't securely store its assets or uses them improperly. What are Binance's fees and asset support like? Well, Binance is well known for being a smorgasbord when it comes to crypto assets. I'm not going to go through the list here as it is pretty damn long, meaning there's a good chance you'll find the coin or token that you want to trade there. There is an important caveat here though, and that's that this coin support relates to the international exchange, Binance.com. There are restrictions on certain assets at Binance.us, and I've linked to the full list of supported assets on that exchange in the description for you guys. It's still pretty punchy though at over 150. Now, if you're going to be funding your account with fiat, there are several currencies and payment methods supported. These include USD wires via SWIFT, SEPA in the EU, faster payments in the UK, etc., etc. There are several other local payment options for other currencies as well. Failing all of that, you always have a credit card option which is available for most currencies. Do note though that the fees on card payments are prohibitively high at almost 3% for most payment providers. When it comes to trading fees, meanwhile, they depend on a number of factors. Now, these include what instruments you're trading, the volume you're doing, whether you're a maker or a taker, and how much BNB you have in your account. However, at a base level, the fees that you'll pay as a regular user, one with less than 1 million BUSD trade volume, is 0.1% for a maker and taker fee. Now, for those unfamiliar, these are the types of orders that you're placing and whether you are making or taking liquidity from the market. Quite simply, when you place an order that trades immediately before filling the trading book, this is a taker fee. These are usually market orders. And when you place an order that is first sent to the order book, that is a maker fee and it's generally done via a limit order. I will say though that compared to many of the other exchanges out there, 0.1% is not a bad base rate for spot trading. And if you do higher trading volumes, then you can get to VIP levels, which further lower your trading fees. You'll recognize Coinbase. I'm going to go out on a limb here and assume that if you're involved in crypto in some way, then you're familiar with Coinbase. Coinbase is one of the OG exchanges, having been founded way back in 2013. In the years since, it has grown to become the biggest crypto exchange in the US and is the only one listed on the New York Stock Exchange. Since that listing back in 2021, things haven't all been plain sailing, but when it comes to reputable and regulated exchanges, Coinbase is one of those at the top of the pile. It's regulated to offer its services in every US state bar Hawaii and holds licenses for Canada and numerous European countries. These countries support what are termed cash balances, which is where you can hold the local currency in fiat. Beyond that, Coinbase supports trading in numerous other countries. Let's just say that wherever you are, chances are that Coinbase is supported, barring places like China, Russia, Iran, etc. Moving on though, are all user assets on Coinbase backed one-to-one? Well, given that Coinbase is a publicly listed company, it has to comply with some pretty strict rules around audited financial statements. These are released publicly and you can view them on the Coinbase website. Here you can see the total assets that they hold on behalf of all their customers. Now, while it's not a Merkle tree proof that allows you to verify your own individual balance, it does come with the stamp of approval of a Big Four auditor, in this case, Deloitte. Another really big advantage of audited financials is that you can see a broader overview of the liabilities of the exchange. For example, solvency is assured when you take a look at Coinbase's balance sheet, i.e., assets exceed liabilities. In terms of coin storage, Coinbase uses a cold storage protocol where 98% of the coins and tokens are kept offline. Those coins that are kept in a hot environment are held under best-in-class security measures. And something that would be relevant to those of you stateside is that your US dollar deposits at Coinbase are FDIC insured. That means that all balances below $250,000 are guaranteed by the federal government in the event of Coinbase ever going bankrupt. So it's pretty clear that Coinbase is one of the safest exchanges out there. So let's move on to coin support, shall we? Now, while Coinbase has not had a reputation for extensive asset support in the past, it's in the position right now where it supports most of the coins and tokens that you would want to trade. There are a few exceptions to this, however, and they include the likes of XRP, which is due to that ongoing Ripple securities lawsuit. On that note, if there are any more of these tokens or coins that are officially designated as securities, then, given Coinbase's regulatory position, it will probably delist them. So it is worth noting that. In terms of fiat support, those who are based in the US, Europe, and the UK have local currency support. That means that you can fund and withdraw from your accounts in either USD, euros, or pounds, and these balances will be reflected in your account. You can also trade against these currency pairs. If you're in any other country, then you can still fund in your local currency, but the balance will be reflected in dollars. In terms of fees, it really depends on the method that you're using. Like Binance, if you're in the UK or Europe, you can do a wire through Faster Payments or SEPA. For SEPA payments and withdrawals, Coinbase will charge 15 euro cents. For GBP withdrawals, they charge £1. If you're in the US and funding with dollars, then you can use ACH, which is free. You can also send a wire, but that will cost you $10 to deposit and $25 to withdraw. If you're in a country that does not support any of these alternatives, then you could also consider SWIFT or a credit card payment. However, as is the case with Binance, card funding is prohibitively expensive. Therefore, I would try to avoid this funding method if you can help it. Moving on to trading fees, Coinbase also operates a maker-taker model with different tiers based on your trading volume over the past 30 days. The starting point for this is 0.6% for the taker and 0.4% for the maker. This is about 4 to 6 times higher than Binance, so it's worth considering that. Although, compared to what Coinbase used to charge, it is a massive improvement. Now, looking at trading features and functionality, I'll note that Coinbase recently combined its Coinbase Pro platform into its standard platform and rebranded it to Advanced Trade. Compared to some of the other platforms out there, it's, well, not the best, but it has most of the features that you'll need for intermediate levels of trading. So, in summary, I can't really fault Coinbase too much. Yes, their fees are higher than average, and they sometimes make decisions which anger the crypto community. but they are fully audited and have weathered numerous storms in the past. Coinbase still remains one of the better solutions for US traders. Okay, on to our next exchange, and that is Kraken. Now, whereas Coinbase can be considered an OG exchange, Kraken is the OG exchange. That's because it was established way back in 2011, and its founder, Jesse Powell, actually developed Kraken as an alternative to Mt. Gox, which you may recall managed to almost destroy the entire crypto industry when it collapsed back in 2014. Kraken was considering joining Coinbase by going public last year, but decided to pull those plans when the crypto market went through the floor. Jesse Powell also recently stepped aside as CEO, which many consider to be the end of an era. However, he will continue to be a powerful force in the crypto space, despite what the corporate journalists think of him. Anywho, looking into Kraken's regulatory licenses, they have quite a few. For example, in the US, they have Money Service Business, MSB licenses, which allow them to operate in a number of states, with the exception of New York and Washington. Something else that you may find interesting is that they were the first and only exchange that was able to acquire a banking license in Wyoming. North of the border, meanwhile, Kraken also services Canadian clients thanks to a FinTrack license. In the UK, they're FCA regulated, and in Italy, they maintain a VASP license with OAM. On top of that, Kraken also has licenses to operate out of Australia as well as the Middle East with its Abu Dhabi Global Markets license. So, it is a well-regulated exchange. Now, as regards security protocols, Kraken really stands out from the crowd. That's because it was actually one of the first exchanges to publish proof of reserves. This was even before the blow-up of FTX. In fact, it did its first proof of reserves way back in 2014. Quite something. Kraken's proof of reserves are also done in conjunction with an auditor who's able to confirm the liability balances on the exchange. As I mentioned before, this is important as it allows one to verify broader exchange solvency and not just customer deposits. Kraken's most recent full audit took place back in February of last year, and it was conducted by Armanino LLP. On to the next exchange, though, and that is OKX. Now, if the name OKX sounds familiar, that's because it used to be called OKX back in the day. However, last year they decided to rebrand by dropping the E from their older name. Bold move, chaps. Bold indeed. Jokes aside, the branding did come with a completely new strategy. If you'll recall, OKX was predominantly a China-focused exchange. However, given the bans that the Chinese government instituted against crypto companies, it made sense for the company to diversify away from mainland traders. As an entity, OKX is owned by the OK Group, which also owns OKCoin. The company is registered in the Seychelles, which I can only assume was done out of convenience. Having said that, they do maintain additional offices in Beijing, Singapore, Hong Kong, Dubai, Malta, San Francisco, and the Bahamas. In terms of licenses, OKX managed to secure one in the UAE in July of last year. This is under the Emirates Virtual Assets Regulators Authority, or VARA. This allows them to offer their services to users in the UAE, the broader Gulf area, Africa, and elsewhere. That aside, OKX has been as transparent as possible when it comes to their reserves. Since November of last year, they've been publishing their monthly proof of reserves. The solvency ratio has always been above 100%, which means that they are fully backed. If you have an account with OKX, you can also verify that your assets are backed. In terms of the composition of these reserves, the wallets are tracked by Nansen Analytics, and they show that over 90% of the holdings are in BTC, ETH, and USDT, so liquid cryptocurrencies. I will, however, note that, as is the case with Binance, these proof of reserves and proofs of solvency do not give a broader picture as to OKX's financial position. That is something that will require a full audit. But so far as guarantees around user deposits go, it's good to know that they are fully backed at OKX. In terms of other security features, OKX also maintains a robust cold storage protocol with 95% of the coins held offline. Moreover, when it comes to the storage of each of these cold wallets, None of them have more than 1,000 BTC on them, and they are stored in bank vaults. On top of that, a cold wallet is no longer used for deposits once a withdrawal has been initiated from it. You can see all the other security features that OKX has over here. One can only assume that these are working because, to the best of my knowledge, OKX hasn't suffered any hacks of its crypto holdings. Moving on though, let's take a look at OKX's country and asset support, shall we? So firstly, you should know that OKX is restricted in certain jurisdictions. The most notable here is of course the United States, but it also includes 2 Canadian provinces as well as Malta. However, if you are in a country that does support OKX, then you have several options for funding your account. They support 30 fiat currencies and 17 payment options. The simplest way to do this is with a card, but it's likely to also be the most expensive. Hence, I would recommend funding with a wire. Yes, it will take at least a day or two to hit your account, but it's worth it when you consider the savings that are made on fees. Thankfully, for those in Europe, there is near-instant SEPA functionality, which is easiest for your euro transfers. Looking at coin support on OKX, meanwhile, it is quite extensive as well. There are well over 300 coins and tokens supported, and they should cover most of your trading needs. OKX also has a number of supported trading pairs for some of the more popular coins, as well as having a decent amount of liquidity. In terms of trading fees, OKX also operates a tiered maker-taker model. However, there are 2 different classes of investor. You have standard users, which are those who have less than $100,000 on the platform or less than $10 million in 30-day trading volume. These users can achieve different fee levels based on how much OKB they have in their account, which is obviously OKX's native token. Then, of course, you have the VIP levels, which are for those who have either more than 100K on the platform or more than $10 million in trading volume. The more volume or assets that you hold on the platform, the lower your fees. I'm going to assume that most of you are not keen on holding exchange tokens or trading over $10 million in monthly volume. So then, the starting fees there are 0.08% and 0.1% for the maker and taker fees, respectively. These are in line with Binance's and lower than Coinbase or Kraken. However, if you wanted to get these even lower, without any of these arbitrary requirements, then I do have a special deal for you. If you use our link in the description, then you can get a 40% discount on those trading fees right off the bat. Okay, on to our 5th and final exchange now, and that is BitGet. Now, BitGet is a Singapore-based exchange that was founded back in 2018, so the newest exchange on this list. However, they have recently been on a wide-scale global expansion, and that has seen them secure several licenses. These include an MSB license in the US, a FinTrack license in Canada, a digital currency spot license in Australia, along with a number of other international licenses. BitGet's expansion has seen the exchange grow over several different metrics in the past year. These include a 300% increase in trading volume and growing their employee headcount by over 5 times. It's seen them climb up the rankings on sites such as CoinMarketCap and CoinGecko, and they are now in the top 10 of both aggregators. BitGet has also published proof of reserves and have completed at least 3 of these since December of last year. In their latest snapshot, taken at the end of January, it showed that they had a 227% reserve ratio. That means that they hold more than double customer deposits in assets. Beyond this, BitGet also maintains a $300 million insurance fund. This is the BitGet Protection Fund, which can be thought of as similar to Binance's SAFU fund in that it stands as a backstop should there be any losses on the platform. For example, if customers had their accounts compromised through no fault of their own, then they would have a right to claim from the BitGet Protection Fund. In terms of coin security, BitGet operates much like the other exchanges mentioned above, in that they keep the bulk of their coins in cold storage and only a limited amount in hot wallets. There are also some pretty advanced protocols that they use to protect their hot wallets from any hacks, which you can read about in their FAQ over here. Moving on to the funding options, BitGet has recently announced support for Euro funding through SEPA and GBP funding through faster payments. Both of these fiat funding options take less than a day to hit your account. They also have a Brazilian real wire option available through Pix. As an FYI, these options are also available for European, UK, and Brazilian traders who are looking to withdraw in fiat as well. Unfortunately, there are no options for funding your account with USD wires or SWIFT payments. Therefore, if you wanted to fund the account with dollars, then you'd have to use the same option that's available to most other currencies, and that is through a credit card. While this is instantaneous, let's not forget that these credit card providers charge exorbitant fees. Of course, there's always the option to fund your account with crypto, and this doesn't come with any fees as well, apart from network fees when